today's topic is the two time frame rule strategy. I always give a shout out to my coach SK. He did a wonderful job on me. Thank you so much. So let's continue. Now, the two time frame rule strategy. We have to take note of all these points that are here: market structure, liquidity, internal and external liquidity, institutional reference points, and the two time frames. You're focusing on just two time frames. Now, why am I saying this? This will be a game changer for you. It's helped me a lot in analyzing the market, and it helped me reduce my level of stop loss. If you're a day trader, or you're a scalper or swing trader, or any kind of trader that you want to be, this can be a game changer for you, just understanding it. I'm going to give different examples. Now, we are looking at this market here as a change of character, right? We're only going to focus on two time frame. You can see it here, two time frame rule strategy. So we picked 4 hours and we picked 1 hour. Now if you can see, there was a break of structure here. Can you see it? And also, let me label it. Okay, where is break of structure here? And we have a shift in market structure here. That's the MSS. If you take your Fibonacci and you draw it from the high to the low, we know that market has to buy low and sell high. We can see that in this area here, we have a fair value gap here that needs to be filled up, and we also have an order block here that needs to be filled up. You can use the strategy even for your people that trade synthetics or any kind of form. It actually works smooth and very nice. Then you can come down to 1 hour. On 1 hour, we are going to wait for markets to get to that reference point. We have no business except for those that want to counter trend. Counter trending, you can try take it 1 hour to 15 minutes, but from here we go down to when market gets this zone. Now we will be looking for swing points. Don't forget I told you swing point is a 3 candle sequence, right? Now there's a shift here. While you're looking for swing points, you can see there's a shift in market structure here, and markets came here and took in this fair value gap, internal liquidity to push up. But let's see, there's also a fair value gap here also. So we have 2 points of institutional points for market to activate in. We have 2 points, we have here and we have here, and we also have an order block around here. But normally this is the last candle, but I'm taking this one because of it has more volume in it. And you can see the market went into the order block. Can you see it? Market filled up this fair value gap here. This is just a way of entering it, like almost like a refinement, but it's a strategy. But we're taking the swing points, and you can see you can take your entry from here, put in your long position around here. I usually leave some pips and go back to the higher time frame. You enter that trade, and you can target this is the old highs. That's, people will call this buy side liquidity, or it's also called old highs, but you hear people say buy side liquidity. You hear people saying it's buy side liquidity. You can target here as a TP1, TP2, TP3, and you're good to go. TP1, TP2, TP3. You can also target all these fair value gaps here as your point of TP also. You also take TPs from the market. This is also a form of internal liquidity. We took external liquidity. Market might react around here in a way. Do you see? Because why this happened, market took out external liquidity and there was a form of internal liquidity here. That was why market reacted that way. That's how I got to know that market was going to act very, very funny here, because an old highs, that's the buy side liquidity, have been taken out. You can see it here. So you can practice this around in your charts. Go around your charts, play with it, see how it works marvelously well. You can play with it very, very well. We have a break of structure here, we have an order block here. Okay, let's see, this was a mitigation block around here because it didn't break up with the body. Let's see, I'm trying to find you a good example. Let's keep looking. Okay, let's use it from around here. Let's do it from around here. Let's use this. This is another example entirely, right? Just for you to understand it better, we're using two time frame, 4 hours and 1 hour. I can take a 1 hour time frame and show you and use 15 minutes for the entry. And you can see here there was what, a fair value gap. I'm trying to make ICT very interesting and very easy because it's not hard. A lot of people are making the course look so hard, but it is not hard at all. It just requires understanding. Then you come down to your 1 hour. On 1 hour, you focus on swing points. This is a swing point. You keep looking at swing points. Your whole focus should be on where swing points are being created. This is a swing point. Swing point also created here, but has not been broken yet. A swing point has been broken, and get a good entry here from this swing point here. Fair value gap, your TP, and you're good to go. You see it. So the moment you're going to a lower time frame, your whole focus should be on swing points. Swing points, swing points, swing points should be your target. Even though you want to use it for even though you want to use it for 1 hour to 15 minutes, let me find something sweet for you here. This is a break of structure. Only an order block is found here. I'm looking for something very nice for you so you can understand it very, very well. It's not that hard the way everyone is saying it's hard, it's hard, it's hard. It's something that you know, and it's very, very nice. This method has actually transformed the way I look at the chart entirely. Now let's assume, if you can look inside this very if you can look at this chart very, very well, there was a break of structure from here. Market shifted structure here. Market shifted structure from here. There's a shift in market structure here. You can see it, right? Shift in market structure here. And what happened? Market came here, took an order block, went up. There was also a break of structure here. Also has a break of structure here. You can see it entirely, right? If you take your Fibonacci from the high to the low, we're in the discount region. Then what do we have again here? We're using two time frame rule now. We're using 1 hour to 15 minutes. Then we take our order block here, around here, and what do we have? We also have a small fair value gap around here. So we know that we're expecting markets to buy. We are targeting markets to buy because we're in the bullish scenario. We're in the bullish zone. Let me use that word. We're in the bullish zone. Then I'll come down to my 15 minutes and I'll be looking at my swing points. All my focus will just be on swing points. You can see that they are swing points, but you will not enter this trade until it enters a reference point, which has happened here, and there was a swing point here. The market did not come back to activate it around. There was a swing point here. Let's see. They're also taking the fair value gap inside here. Let's see what will happen. Let's keep playing. Market didn't come back to us again. Market actually went for the what? There's a breaker block here, but market just went up and filled out the liquidity void. The entry was here. This liquidity void, I don't know if I can mark it very well for you to see. The entry in the chart is entirely different. Entry, that's what I got to learn in a hard way. Entry is entirely different. There's a liquidity void inside here, which this market came until this week and it took it in, and we are good to go. You might be waiting for this one to come down here, but the entry was from here. Market had come in and used the liquidity void, took its own form of entry, and it's going its way. You can see it also came back, but it didn't come out to the breaker block. Still the same liquidity void because market had not finished filling it up, and you can see what happened there. You can see it, right? But there's a shift in market structure already from here, so you be careful around that area because market has shifted around here, so be careful. So it's just a normal analysis whereby you can use it for your form of entry. You'll be targeting swing points. The moment you see a shift in market structure in the swing points, then you know that market wants to shift structure entirely. You find your entry. Swing points is a mitigation block around here. You can see it, mitigation block. We only used 1 hour and the second time frame was 15 minutes. Mitigation block, market came in, took its entry from here, mitigation block, and you're good to go. So it's your two time frame, your premium, your discount Follow all the rules and regulations that are required of you, the scenario reference point, structure, liquidity, internal and external liquidity, and you're good to go. Please don't forget to subscribe on my channel. I hope I'm able to share good and amazing value to you to change your trading. Don't forget also that strategy is not the goal in the market. I learned it the hard way, and that's what I came up with, teaching people how to trade, because I got to learn that it's not about the strategy. Be good in one strategy, then the next target is work on your psychology. I hope this video was impactful to you, and don't forget to subscribe again.